G'day traders, working on a wrap up of the markets for Monday the 14th of October. So let's have a look at these longer term charts just to get a feel for trend momentum, support and resistance areas, and we always do this before starting the day, and also we're constantly referring back to this chart. It gives you that longer term influence or idea of what's happening, and even though we trade very short term, this is very important part of the process. So here's Monday, so we can see the entire day here. We're doing this wrap up after the day has happened. So leading into today, and you'll see as I bring up the 1 minute chart, you'll see these areas marked in here. But basically, we opened up the market and we're sort of where we're going to either head to this area or head down to this area here. In the end, we've headed up, broken through this support and resistance area here. From there, we've headed straight back up to the next area, and you'll see as we have a bit of a closer look, anything that's broken can quite often then act as a support. So this is resistance, it broke through, then acts as support, really confirms that line, and off it goes again, heading up. So leading into today, we spoke about how this market's within a bit of a channel. You can see, apart from this area here where it broke up, beforehand it was in this channel, it's sort of come back within the channel, and it's bizarre, leading up to today's cash market. The market was so strong on the upside, closing on Friday, and then it's opened up Monday in the pre-market to where we're about to trade the cash market, significantly lower. It's gapped after closing high and making higher highs. It's gapped right back down to within this channel. So that was something that was certainly playing on our mind, going, okay, let's just see, does this market want to go down? And the fact it's closed lower, be wary that if we want to come down, get under this area, it might start breaking down. But the fact is, once the cash market opened, it never went down that way and started heading back to where it closed from before the week started. So that was, anyway, stuff we're talking about leading into the day. And also the fact it's within this channel. So once it started getting out of the channel, it got momentum and got to the next area quite quickly. So let's have a closer look at it, at what I mean. So here's these areas, here's this lower and upper area. It went to the upper area quite quickly, and then eventually straight up to the next support resistance area, which we'll slide along and have a look at soon. You can see these boxes, so we always mark these boxes in before the start of the markets. We also mark in the support and resistance area as well. They're predetermined based on price action and price movement, but they're there before we start the day. It's not like we draw these lines in after the day's passed. So these are already there, sort of indicating support and resistance areas to be wary of. So these boxes, to start off with them, they're just boxing significant areas. So let me just squash it up. I've just put a box around the pre-market, so the most significant high and low of just that pre-market before we open and get into the cash market. From there, if the market decides it wants to head higher before 10 o'clock, I also include that. So we include 10 o'clock, box the 10 o'clock high point. So you can see, even though here's 10 o'clock, there's a significant high beforehand here, which we've boxed, because 10 o'clock is like the unofficial opening of the day. What happens is traders, banks, institutions tend to wait about half an hour, let the economic news come out, which it's normally any major news comes out about 10 o'clock, and then from there they get going with their trading day. So a high point, or what we call a pivot point, or a swing high point in this particular case, it's significant within the market. We want to put a box around that and just be wary of it. And it's a great area to look at future trading setups from. We're always referring to it in the trading room. It's either it's an area can come back and break higher from, or it's an area that might look to hold and send the market back within its range. But most days it's very significant, and it has some sort of impact on the day, so we definitely want to be wary of it. So like we said, we start off in this channel. We're very conscious of the downside, believing that it could, after opening significantly lower over the weekend, from that weekend close, the new week opened up significantly lower, wary that it could come down, but in the end it just never went that way. No markets showed any sort of signs of going any lower. It just went straight up, and then from there just went into this sideways range, continued along that channel for quite a while, almost up, for the entire session, right up till the lunchtime. And then eventually it's got some momentum to the upside here, and what will happen is, let me sort of drag these markets along. When this market does break, you can see as it's looking to break around about here, you can see my cursor on the other market as well. I've got the Russell and the Nasdaq on the left hand side. They're great support markets, or use them as indicators. Like because they're smaller volume traded markets, quite often when there's a move happening, these other markets on the left hand side will get the jump first. So especially in breakout areas and things like that, you'll see it happening on the other markets. So you can see what I mean by the Russell, this particular area here. It's well and truly broken already, as the ES, the market we trade, is trying to break. That's quite significant, and so eventually, it's got there and gone higher. But not first before testing this box. So like I said, it tested this area is quite significant. It came up, looked at it, pulled back a bit, and then it's gone. And we're seeing the other markets, especially as the ES is breaking. Look at the Russell top left-hand chart. It's well and truly on its way, showing signs of buyers being around and the potential to really get going through this area and potentially go higher. From there, that was sort of what the market needed to get outside this channel, and it's quickly popped up to this next level. So leading up to here, once there's momentum and power, this is where the PowerPoints come in handy. So we didn't have any pullback PowerPoints, but if you believe the strong momentum and direction, you might look at sort of looking for some sort of hold and continuation move here. Especially when it sort of breaks out and tries to come back here and holds off sort of off the outside of these 10 o'clock or these pre-market boxes. They're the PowerPoints that work really well. If sort of pull back right here and got some sort of trade set up around here, they're really great. But this one's gone a bit higher. It's gone 1, 2, 3, about nearly 3 points. Sorry, exactly 3 points. So hasn't quite got back to the PowerPoint, but that's the sort of things we look for. Look for continuation, momentum, and then some sort of pullback and continue on with that trend. From there, we've got up to this next support resistance area. This is what I talked about before when we look at the 50-minute chart. It hasn't really held the market down. It's broken straight through that resistance area. And when you see something like that, if it comes back and looks to test it, normally it would be a good area to hold and go higher from. It's just proving by going through that area with quite a lot of significance. In the past, this area might have held the markets up and sort of hung around for a while, but this particular case has gone straight through it. That's a sign that there's buyers around. So it goes up, comes back, and the buyers are going to hold. The buyers are around, they're strong, they should hold this market and head higher, and that's exactly what they've done in this particular case. And this day, that just continued to go higher. It's one of those days where it's just pretty much a one-directional day. Most days you'll see the market sort of revert back from the range, you get you get say 2 or 3 trends. This particular day, we pretty much just had one trend for most of the day. We had that sideways movement, then this upward trend, to where we usually finish up the trading room around about 1, 2 o'clock around this area here. So that's a wrap up for the Monday, and we'll be back to do it again on Tuesday.